morning, sexy bitches. Microphone work. Welcome to the Joe Rogan Show. Hey, do we have sound? Do you have my microphone? No sound. Turn that down. I'll turn that down. Do we have sound? Do you have audio? Oh, you can. Is it clear? Or does it sound like I'm a mile away? Not with the music. All right. I tried to turn it down. Far away. Sound is good. A little bit of echo, normal room echo. But like, no, I don't think it's got the right microphone. Hang on. Let me see if I can switch this. Properties. Default. Here we go. Now it's going to be good. You're going to say, oh my God, that is so much better, Wayne. Oh my God, Wayne, that is so good. Now is it great? I don't want okay. No. I'm not an okay person. Trust me, I'm not okay. So now it's beautiful, right? You're like, oh my gosh, Wayne, what did you do? Sound is it just made my day. Hey, good morning. How are you, huh? Welcome to Forex.Today, the YouTube community of 20,000 foreign exchange traders. Perfecto. Yeah, it's like in an office. Yeah. Well, anyways, I'm in a place in New York City where arrogant assholes get together and do their arrogant asshole stuff. But it's not the Harvard Club. That's across the street. So I ran into a situation where there was a problem with the room, or a problem with me booking the room. And they're like, oh, your room isn't available till tomorrow. I'm like, no way. So they called the Penn Club, University of Pennsylvania, which is another Ivy League school. Their club is across the street. So, anyways, I'm live from New York, West 44th, West 42nd Street, but from the Penn Club. If you don't know Penn, University of Pennsylvania is where the Wharton School of Business is. I would say it's the #2 business school. Harvard be #1, but the biggest thing is Harvard is a liberal school, and Wharton is a conservative school. And you might know Wharton. If you don't know your Ivy League, you might know that Wharton is where Trump went to school for his business degree, right? So his MBA. Um, but the other sort of famous person that went to this school, somebody named Benjamin Franklin. They have Benjamin Franklin things everywhere. Everywhere you go, it's Benjamin Franklin, which is cool. Hey, dude, yeah, founding father. But you know, Harvard has more than one famous person. Yeah, so, anyways, uh, here he is, and here we shall be. And so let me do the disclaimer, and then I'm going to tell you how this is going to go down today. It's going to be a little different, but we'll see. Let me remind you that trading is risky, not appropriate for everyone. Your past performance, good or bad, not necessarily indicative of future results. But hey, all humble on the long term and never risk money. Hang on, I'm going to put the chat on. I think so. Yeah, that should be better. Wait, what? Now you're not. Now the sound isn't good? No, it should be. It's fading in and out. Shouldn't be fading in and out. Disclaimer unclear. What are you saying, Polly? Wayne, can you estimate the number of businesses and restaurants open now? Oh, nearly 100%. COVID is over in the United States. If you want some COVID, you got to go to China. They got some COVID. Somebody said the disclaimer wasn't good. Johnny, I'm wearing a wireless lav mic, so it's right right at my mouth, so it should be there, and it's redlining on the screen. So, but I'll do my best. But I need to do the disclaimer. So let me remind you that trading is risky. It's not appropriate for everyone. Your past performance, good or bad, not necessarily indicative of future results. Please stay small, stay humble, focus on the long term, never risk money you cannot afford to lose. Well, if I have to hold the microphone on my mouth, that's fine. But right now, it's just a laugh. Okay. All right. So here's my plan today. For some reason, MT4 does not seem to be compatible with OBS, which is the Open Broadcasting System source software, whatever, for streaming to YouTube. Why? I don't know why. So, which is strange because, well, it works fine on my PC at home, but for some reason it won't work on the laptop. So today I thought what I would try for web, which is just, as you can see here at the top of the screen, that is just available right at, in fact, if you're at Trader's Way, I just click on MT4 Web. The only thing is, I've had an account with Trader's Way for, I don't know, 9 or 10 years. And I don't think they had MT4 Web back there. So I tried logging in, and I don't have the right type of account to log in. So I can't, which is just another problem. So I haven't been able to log into my live account um, onto web. So I don't know. I'll contact the team and see what needs to get done. But anyways, so don't heckle me. We're not going to be able to see my open trades. Uh, but anyway, so I think it's streaming just fine. And so what we'll do is we'll go through the charts. We'll do the basics. I'm flying naked, obviously. I don't have any chart templates set up right now, or I don't know how to do that with web version of MT4. But hey, man, what we'll do is we'll do our best. How about that? And so I'll go through the charts, and I think one of the things we'll learn is what we miss the most. Like I can tell you right away, I the pivot miss the pivot points because they give us not necessarily entry points, but exit points. And I know we're sitting on some key exit points and maybe some key places, turning points in the market going into the second quarter, but I just don't have that. Neat, right? But I do have 3 cups of coffee. Okay, so there we go. So a couple of other things that I need to tell you. There's a lot of newer traders that watch these live streams, and newer traders. I mean, we all need resources, but especially newer traders. They're going from guru to guru to guru to guru, looking for you know, it, guidance on how to do this right. So if you're brand new, let me tell you, I'm not trying to sell you $1,000 product. Um, some of the things I do offer cost money. Most of them are unbelievably affordable. Um, so that's that. So if you need resources, I'm here every single day on these live streams at Forex.Today, absolutely free. Many of the people here I've known for over 10 years, some even 15 years. I've been doing this every day for almost 20 years. Non-farm payrolls, which I'm doing live with FX Street on Friday, I believe that's my 16th year. That will be the first webinar of my 16th year, doing that webinar every month. Just that one webinar on FX Street I've been doing every month, 15 years straight. So I don't have any sort of new tips and tricks and strategies that will make you rich quick. I've been doing the same thing for 20 years every single day straight. So I'm around, I'm available, I'm visible, I'm a real person. So you can come here every day. All that's free. In the description below today's video, there should be a link to free trading um, videos that are on my FX Bootcamp YouTube channel. If you go to fxbootcamp.com, it's $88 a year. Okay, $88 a year for 65 hours of training videos. So obviously, like, dude, $88. So anyways, those resources are available. Chart templates, they're linked below, but also a link to tradersway.com. You need to open up an account there, start with the demo, play some trades. You'll see the execution speed is fast. That's good. Spreads are narrow. That's good. Okay. Swaps are amazing. And amazing is good. ADP, ADP hot. Thank you, Jim. Okay. So all of that is really good, but honestly, I recommend choosing a broker based on things like business ethics. And Trader's Way has earned my loyalty and respect. I recommend them to you. There's a link in the description below. Click on the link and open up a demo account. Huh? Simple enough. Okay. Oh, and if you think like, oh, he's only doing that because if I open an account at Trader's Way, I'm going to earn money on your trading. No, that's not true, actually. I'm not an introducing broker with Trader's Way. So there you go. Tradersway.com. If you value a trustworthy, ethical business. Okay, so let's get on with it. Good to see you. Jean-Guy Boucher says, hey, incredible. Been here 4 years. Right on, man. Honestly, though, Jean-Guy, yeah, I feel like I've known you a lot longer than that, which is, so you say 4 years, and I think that's, it's only been 4 years. Uh, so yeah, anyways, yeah. You've been putting a lot of effort into this, and I appreciate that. Okay, cool. So let's take a look at some basics here on the euro. Okay, cool. We have somewhat of an uptrend, right? What do you think about that? That's good. And that started, what would you say, a day or two ago? Well, the big thing is, and I know it. I know it's there, although I can't see it. I know it's there. In this part here, I know that that's the projected bottom of the month that we had way on March 1st, even late February. We knew that that was likely to be the, well, not likely, but we had projected. Okay. Patrick says, can you still understand your English if you are not a native speaker? I think I speak clearly in reasonably proper English most of the time. I know I'm a stickler for writing, right? So and people who write well typically speak well. So I think so. I think so. Sometimes we have a little bit of fun in what we do. I probably babble and go into into weird pop culture stuff, but most of the time, yeah, I'm pretty stable mentally, emotionally. Oops. Yeah, I think so. But that's why it's $88 for a year. Okay. So, anyways, going back to this, I want you to think about the mindset of a trader. If that's the projected bottom, let me ask you something. Do you think it's helpful to have a projected bottom for euro dollar 3, 4, 5 weeks in advance? And then, second, when you get there and it bounces and it bounces and it bounces and it bounces, and obviously respecting that level, once again, it should be helpful. So now we've moved to the next part of this, and it's been up ever since. Now, the sad thing is I bought it out, bought it out, bought it out, bought it out, break even, break even, break even, break even, and then boom, now it's gone. It waited for me to travel. But it's weird, like this is not a good time of the year for me to be traveling. This week and next week are like epic weeks. But I don't know, the consulate general will not wait. So, anyways, I'm doing the best I can. Okay. So, anyways, we're starting to climb there, and great. Maybe this is a front run for the rest of the month. Could be. Maybe we're already in second quarter type trades. Could be. My stock portfolio is doing well. Remember, I started buying stuff at the bottom of February, and then I started buying again at the bottom of March. Hey, got a runny nose. So, I bought again. I think it was third week of February. I bought. Then I did nothing for about 3 or 4 weeks, and then about the third week of March, um, maybe halfway through March, maybe around the Fed meeting, I think I was buying again. And yeah, so anyways, all of that's worked. Okay. The reason I mention that is that fits into the same model. So I build a model first, and then I use technical analysis to confirm or deny where I am in my portfolio construction theory, and then try to build into that. So this moving up at this time is what we talked about 3 months ago, right? And if you're a member of FX Bootcamp, like we talked about this going up this week 100 times. Like it's just built and ingrained into what you do. Cool. Take a look at this. Okay, same thing, turning point. What's some of the information are you missing on this? Like, are you missing a moving average, for example? So let's try that. Indicator trend moving average 14, 21. Close is fine. EMA should be fine. Show all time frames. And it doesn't let me change the color and the thickness, really? Well, let's throw it down and see what happens. There's the 21. Let's say, oh, it's the thinnest 21 I've ever seen. Now I guess you got to go into properties. No, still. Really? Indicator list, delete indicator. Interesting. So that's the best I can do, huh? Huh. Whale oil beam. Maybe on properties. I guess we can get rid of. Good. We got the bid ask. That's good. Period separators. Well, I'll get rid of grid, but I'll throw periods down. Show object. Show volume. I don't care about volume. All right, cool. That's helpful. Makes it a little easier. Okay. So, anyways, can you see on this time frame at least how we were neutral, bearish, neutral, bullish? Okay. Now that's interesting, of course, but the best part of this interesting process is the time. Again, at the bottom of this week is when we expected not pound strength, but dollar weakness. And maybe just maybe this is it. We don't know. Maybe it's just today. Maybe it's right. But Apple has had what 11 days in a row where it's up, and the stock market is up 4 days in a row, and I'm hoping it'll be up a fifth day. And that's all based on money allocation that I've talked about with you guys a million times about allocation from money managers that have to be done by the end of the month, but then also allocation done by individuals um, based on taxation rules needing to be done by the 14th. So maybe all this money is coming to play right on time. Stock market's up, right? Stock market is up, dollar starting to weaken, and this is exactly what we've been talking about. So if you want to learn about this stuff, seasonality, fundamentals, policy, banking, all that FX. Bro, good deal, bro. Good for you. Okay, take a look at Kitty Cat, and holy smokes, huh? We had this big dollar strength not long ago, and then what? Canadian dollar strength and US dollar weakness. So we look farther back, and look at this one. This one's been at play for a while. So you guys remember what happened on the 16th right here? What happened right in here? Anybody? Bueller? 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 Yeah, the Federal Reserve. Cool. What did we expect out of that? We expected an interest rate hike and the US dollar to weaken. Can anybody confirm that? Those are my two assumptions. Yes, the Fed was going to raise, definitely. And the US dollar would definitely weaken. Can anybody confirm that? Can we get like 25 people to confirm that? Okay. And it's important to the newer guys and gals because you were probably taught, maybe even told, I don't know who else you listen to, but you probably have been taught that the Fed raises interest rates and the dollar gets strong. Well, that's not what Uncle Wayne said. And now, if you go through your charts, go look at March 16th, go through all the different pairs and see, did the US dollar get strong or did it get weak? Okay. So you can listen to your college professor, right? Or you listen to me. And who teaches me? The market. Cool. All right, cool. So very important. Hua. Hurrah. Jim, who says hua? Who says that? That's not the Marines, right? Hua? You don't even know who says ua. Hua? It's a question. It's a question. It requires an answer. Hurrah! You're a Marine. I guess it's not Marine. Hoorah! Right. But then there's hua. I don't know about no hoorah. Yeah. All right. Let's zippity over to zippity Aussie dollar. Oop. And yeah. Okay. Let's talk about this. Okay. Again, you were taught interest rates go up, the currency gets strong. This is March 16th right here, as you can see. And the United States raised interest rates and the US dollar weakened. Richard, it's like it's on a movie with Marines. Really? So this mic isn't clear? I I mean, this is an expensive microphone. I was hoping that it'd be like perfect. Do I have to hold it? In sooth, I know not why I am so sad. Maybe I'm just talking quietly because I'm in a hotel room. I don't know. It is slightly funky, huh? It's too bad. I think I got it jacked up as loud as it goes. All right. Too bad. Too bad. So sad. Money well burnt. So once again, March 16th, this market reversed. Fades in and out, huh? Too bad. Okay. Cool. Now I don't have pivot points, but what I could do here, and I is this: I would trap it low, trap it high. Okay, we're stuck sort of there in the middle. Okay, and wait for a breakout. All right. Mm-hmm. Advanced audio properties. Do I have another way to make it better? I don't think so. Anyways, so I would trap that and see if it breaks to the upside, buy a little dip. Okay, that's what Dwayne would do if I were me. Kiwi's going to be about the same. I don't think we need to go into that. So we did US dollar versus Aussie, CAD, Euro, Pound. That's good enough for the girls I go with. So let's take a look at some yen and look for congruency there. Well, nothing phases Barry. Okay, now check this out. A few days ago, we were in this massive rally on yen pairs. And even though they've been going up, we're expecting some yen strength. We had that big move on Monday. I don't know if that was Monday and Tuesday. Where are we now? Wednesday, Tuesday, Monday. Okay, so we had that big move on Monday. And again, I don't have monthly pivot points on this web platform, but if I did, it would show you that like monthly pivots, for example. Oh, hang on. I have to unlock my drawing tool. Hang on, let me do that. Activate Pro, enter your activation code. Gee whiz, I'd have to. All right. All right, I can't do that. So the target for the month would have looked like this. Okay. Oh, terrible. Terrible. Okay. Right. Our projection a long time ago was top, sort of in this area. Okay. That would be technically, that's based on price and market. We had this around 100. Of course, that's a cycle, but you'll see that all the other pairs have reacted similar without having such a big cycle. So this is a big psych level. 100 was obviously a target, but since then it's come down. Now why? Well, maybe that's it for Japanese intervention. Maybe there's some new policy somewhere. Maybe there's some risk because of geopolitics. That's probably what all the other gurus are talking about, which may or may not be true or somewhat true. The issue is 6 months ago, before there was a war and before there was central bank intervention, and before all of that, we talked about the potential for Japanese yen strength at the end of March, beginning of April. Now, I don't know if that's going to happen. Like the US dollar suddenly going from strong to weak, we're looking at yen going from weak to strong, and they happen to be happening right now, just in the last day or two. Once again, it may be nothing. It might be confirmation bias. We might be seeing the patterns we're looking for versus recognizing what is actually happening. So there might be confirmation bias here and a few other flaws. However, it's happening right exactly on time. I'm not talking about something we discussed a week ago. I'm talking about something we discussed 6 months ago. So, anyways, it's kind of interesting, right? That if you started with the idea that this is topish, you get a big drawback, lower high, lower low, lower high, lower low, lower high. At what point do you get on the clue train? Johnny's like, CAD yen hit R2 on Monday. Right. I think it missed it by 3 pips or something. But yes, I, I can't see it. I just have it in memory. Okay. So kind of interesting when you start folding these other layers. So Johnny's like, so what we're talking about in the chat is that we expected this price to be the projected top for the month of March. Yeah, oh, for sure, Johnny. But what I'm saying is like, so Johnny's pointing out something that 3, 4 weeks ago, and by that circle, I mean inside of that circle would be the top. Not roughly there, not because that wick is there. No, 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 no. No, 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 no. Not because the wick is there. Okay? Not because the wick was there. It was something like this. On the 1st of March, I think we had that as the high. 100.21. Right. It might have been 100.23. And so look, we go up there, tickety boo, and we slam into that price. And then we're like, hey, man, if this falls from here, it would be technically important because that technicals would then be confirming, not something that's fundamental, but more seasonal. Okay. So, anyways, that might be helpful if you were trading to have that projection in mind. Now, the thing is, right, we know newer traders just keep buying this dip in this upward trend, right? Right? An amateur is going to buy here and buy here and buy here and buy here. And maybe they rally up a little bit, maybe they don't. The thing is, our model suggests that this can fall quite a bit. And maybe it does, maybe it doesn't. But I'm pretty sure a lot of people are going to blindly buy dips because they're going to look at their chart and say, this chart says uptrend. Oh, I can see that. But what your chart is actually telling you is it was an uptrend. Okay. So that's why learning technical analysis first is good because you have to be able to read this chart. And you're going to have to know things like price action and pivot points. That's what I like, and moving averages or oscillators or really whatever you want. But you got to get good at reading the chart. But it doesn't really tell you the future. Okay. Cool. But everyone's got to be great at technical analysis. Although George Soros doesn't use technical analysis, and he does pretty good as a Forex trader. But bear in mind, too, not only does he make more money than you, he's also lost more money. George Soros has quit probably 4 times in his career. Hey, Johnny, is today the big day? Furnace day? Every day I wake up, I'm like, I hope Johnny's okay. So there's kitty cat. We can move on to the Aussie, also a commodity currency. Okay, and you can see very much the same thing. I don't know why it's loading over there. Hello. Uh-oh. See, I keep asking questions. I want to make sure the live stream is streaming. Is it coming through? I'm on a hotel Wi-Fi, obviously. So yeah, all right. Oh, you missed the question. Yeah, do you got your furnace, man? Is it furnace day? Okay, good. I think I can see now that YouTube is giving a couple of errors, but we're going through. It's a lot better than it has been on recent travels. So this is weird. I don't know why it's so far out there. Maybe I'll kill this. Still, there, a little. Well, I'll go to 4 hour, and it's a little. All right. Well, we'll look at it that way. I guess you go out to 4 hour, and it just doesn't have enough data. So, anyways, once again, can you see how there could be a top forming? Okay, there could be. So we're riding the 21, up, down, buy, up, down, buy, up, down, buy, up, down, buy, up, down, up. There could be a changing of the guard. Now, if you are still a bull and you believe this is going to go up until July, which it can actually, despite my insistence that the yen can can get strong at the beginning of April, it doesn't always. Sometimes it takes all the way to summer and then the yen gets strong. So there's like kind of a two period in the model where, let's say, beginning of second quarter or end of second. And very often it has to do with where we are in the business cycle, where we are in the central banking policy cycle, which is obviously connected to the business cycle. Sometimes, like this year, it's impacted by the political, the political cycle, and so this year is kind of different. So maybe it moves early, maybe it moves. By the way, right? I was saying to the live group last night, like one question I get a lot is like, going to Harvard worth the money and the time? I went in my 40s, so was it worth the effort? And so that's a big question I get. And I said, well, yeah. And so look, moving into this hotel today, a different Ivy League school, the Penn Club is nice. And as I'm checking in, I was looking at the event roster that they had on the front desk, and earlier that morning, one of the Fed presidents was having coffee with members here. And by members, I mean like 25 or 30 people. So imagine you're a foreign exchange trader or some Wall Street investor, and you have access. You can come into this club, have have a coffee, and sit and talk directly to a Fed president. You're not watching it on CNBC or Bloomberg. You're not reading about it in a newspaper or on a website or a blog post. You're not reading a press release. You're asking President Hawker, no, right, from the Philly Fed. Philadelphia is in Pennsylvania, and we're in the University of Pennsylvania. So you see how it makes sense? So now you can ask a person who sits on the FOMC and listens to the data, knows Jay Powell personally, probably talks to him every day, right? And you have direct access to that. Now later, that was yesterday. This morning, one of the congressmen from New York is here talking to members, right? And this congressman is running for governor, and that's coming up in the political cycle. And so this governor, this congressman is, and potentially the next New York governor is sitting down talking with members. And maybe you're a real estate developer, and now you might be able to you know, right? The governor of New York, and you're trying to build a project here, and now you're like, oh well, you've met with this person, and they know you're from the club, and maybe you can reach out if you develop the relationship. So, long story short, is it worth it? Uh huh. I think that's really cool. You're like, oh, I know the governor from New York. I met with him while he was still running, and super nice dude. You threw some money into the election, and boom, now you got this contact, and now I think it's cool. Side note, does MT4 pivots work on Apple? Well, I don't believe it has anything to do with Apple. It's more like on your machine, can you run uh, Windows stuff? But I guess there's an Apple MT4 now. So I don't know, dude. I don't know. Why don't you just buy a PC? I don't know. I don't know. I don't know. Okay. Now, Patrick says, until then, should we expect yen strength into summer? Well, you have to put together a thought process. So let's say you go with me and you're like, okay, I'll use Wayne's model. Yen might gain strength right about now. So when you see yen strength, you buy the Japanese yen, but you manage your risk appropriately. And then if the yen goes from strong to weak, you do not continue buying it because remember, a model is just a model. It's a rough guess based on maybe some historical norms, but I'm telling you, every year is not normal. There's always something. And now we got geopolitical risk. We got a Fed jacking up interest rates and maybe even increasing the velocity of rate hikes to maybe even raising the terminal rate. And then what about balance sheet reduction? Fed's never done that before. How's that going to play out? Well, none of this exists in the model. Okay. You sure know what I'm talking about? So, interesting. Anyways, interesting. So you use a general model, and if your technicals line up with your model, you try it. But people in my live trading groups, one of the things that we've been talking about, right? One of the things we've been talking about is you build a base case model. What do you think is going to happen this year? And I outlined a base case. And in fact, in the swing trading group, they worked out trade plans based on my base case. And then I recommend after we worked for about 3 hours on my base case as a team, then I said, what you should do as an individual now is develop a worst case scenario and how you think the market would react month by month, quarter by quarter, right? Try to line that up. Things go bad in Ukraine, um, you whatever, right? And so you have your worst case scenario, and then you have a best case scenario. Just like all of a sudden, like everything is golden, right? Like something amazing happens. Maybe we get peace in the Ukraine, and all of a sudden, like commodities are coming down, and that brings down inflation. Then the Fed comes out, and they're like, "Yeah, we're going to hit Goldilocks. We're not going to raise nearly as much. We're going to, yeah, continue with the balance sheet reduction. So the BSR is on, but our terminal rate for interest rates is probably going to come down, and we're going to stop you know, 50 basis point hikes. We're going to go back to 25. And all of a sudden you're like, oh, yeah. And the market just rallies and the stock market's up, real estate's up, interest rates are coming down, commodity prices coming down, inflation's coming down. All of a sudden, right, everything is right as rain. Well, well, we still have seasonality inside of that, okay? And if that is occurring, what do you think would happen with the dollar? What do you think would happen with the yen? What do you think would happen with the pound, the euro, the Aussie, the CAD? How would that play out? So you're building a model. Retail traders walk in and they have no model, they have no long-term or medium-term or even perspectives for tomorrow or next week. They just show up looking for some volatility and hoping to pull out 15 pips out of the market. Maybe 20, 25 would be great. Um, okay, that's fine. You can start there. But I want you to think bigger and be bigger and have bigger conversations at first with yourself and then have bigger conversations maybe with some other traders. Challenge yourself. Be intellectual about what you do, not mechanical, but intellectual. And then, but you trade mechanically, but you plan and strategize intellectually. Okay. And I'll be here to help you with the economics and stuff of that. Cool. So develop a best case, worst case, and a base case. I think you'll find it an interesting process. Okay. So, anyways, this is coming down based on our base case model, um, perfectly on time, and based on technical analysis at the perfect price. Sweet. So let's try something different. Let's move on to like a Swissy here, and the key line in the sand. Let's see if I can get this to work. Parameters. Yeah, you do it over here. Okay, what we care about is the price of one. One. Another word for one, where 1 euro buys 1 Swiss franc or vice versa, okay, we call that parity. Now, where did it go? Where did it go? Maybe it didn't like that I only did, let me do this again. Horizontal parameters. Okay, maybe I'll do this. 1.00000. Maybe like that. 3, 2, 1, click. Go, go, go! Nothing. Oh, it's below me. That's why. Sorry. In my mind, I thought it had gone farther. All right, so there he is. Okay, there he is. That's this area here is critical. We're up there. So one of the things that might be happening is, okay, it's not really, I don't want to call it an inverse head and shoulders, but let's just call it price action. Okay. Okay, we'll call that price action. And maybe we just kick off this 21, come up, come down, and we're riding the 4-hour 21. And the next big challenge is we breach, okay? We breach above 104. And if so, then we're game on. Then this is probably the bottom for a very long time, maybe even the bottom of the year. Okay, and a bigger time frame would look like that. Okay. There's probably some sort of Elliott wave in here. 1, 2, 3, 4, 5. 1, 2, 3. 1, 2, 3, 4, 5. 1, 2. I don't know. Whatever, man. Whatever. If I had free time, though, I think maybe I would get like certified in. I'd get certified in Elliott wave just for fun because I have nothing against Elliott wave. I just don't. It's not my style to count things and then because this is a B correction of a. I just don't think that way. But I get it. Price action, Fibonacci, multi-time frames. I can see it. I can see that all of that is in there and it's valid. And I discovered all that myself. Elliott Wave just happened to write a book about it, and now everyone does Elliott Wave stuff. But I get it. I can see it. I'd like to be a little more flexible. I don't like counting and labeling stuff. And it doesn't fit my personality. right? Like Todd Gordon is an Elliott Wave guy, and I've met him, I don't know, maybe 3, 4 times I've spoken on. And he's the type of guy that probably does have manila folders, right, in a drawer and on his desk. And he probably has a label machine so that he types it in and it prints a little label and he puts it on the manila folder and then he puts 2 pieces of paper in the manila folder and puts it in alphabetical order. So he being an Elliott Wave guy makes total sense. I'm I'm not the same. So yeah. Yes, macroeconomics is an important subject, all capitalized. I would agree with you, all capitalized. Yeah, right. Yeah, Patrick says, yeah, he agrees that it's time to make a trade and maybe 300 pips, I think is what you're saying. Yeah, I think, you guys are trading on a demo account, right? You're learning how to trade properly, which is great. Why don't you try in the next week or two to make some trades and try to take 300 pip profits on the trades? It's just a demo. Try your best, okay? And get the trades on and maybe take the same trade 5 times and put 5 different stop losses or move them at different times. Like, this is how I learn. Like, many of you guys, um, you think you're going to just open your chart, listen to Guru on YouTube, and start trading, and you'll just keep trading until you're a better trader. It's not going to work. I'm telling you. You can go golfing once a week, and 25 years from now, you suck. You never took lessons. You're never proactively learning. You're never proactively challenging yourself with a 5 iron. You've never just sat and hit 1,000 shots in a row with a 5 iron. Okay? Can you imagine if you played a round of golf and all you used was a 5 iron? So you'd have to drive with a 5 iron. You'd want to hit it low and long. Then your second shot, your approach shot from a 5 iron. Okay, different shot. And now you're even trying to chip onto the green with a 5 iron. Okay, now putting would be stupid, but like, wait, chip onto the green. First of all, you're not going to take a full swing. Okay, maybe you want to change the weight to your back foot, not your front foot. You're going to have to open your face to increase the loft, which means if you're right-handed, you're going to actually have to aim a little bit left. So you're going to have to open your stance as well as right, and hit a 3/4 swing with an open face, aiming left, and it goes a little bit right, and it lands on the green. And if you're able to do that, you hit, if you spent 1 year mastering your 5 iron, oh my God, you can do any shot. You can hit it high, you can hit it low, you can do a bump and run, you can chip it, you can fade it, right? You can shape it left, you can shape it right. And your confidence level is epic. You're like, give me that 5 iron, I got this shot. Okay. And then you do that with I don't know, a fairway wood, and you spend a year on that. So my point is, instead of just showing up every day and trading and being mediocre at what you're doing now and practicing being mediocre, instead of doing that, because I think in 5 years you're going to be mediocre because you've practiced every day being mediocre. Why would you get better? Oh, well, I listened to a guru on YouTube. Well, that's not how I learned how to trade. Okay. So, for example, like I was saying, why don't you try to make a 300 pip trade? Okay. Now, the second thing is proactively learn how to manage your trade. So, like I said, on your demo account, you go pachow, 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 5 trades, and then put different trade, practice the risk management, which is your stop loss. because they all have the same target, so that doesn't. But then say manage each individual trade, which is the same trade. You all made them 1 second apart. Manage the stop on each one differently and find out which one keeps you in the trade with the least amount of risk. Is it the one with 33 pips, the one with 55, the one with 99? Okay. But then the other thing is, when do you move? Do you, right? Do you move break even when you're up 50 pips, 100 pips, 150 pips? Like, when do you reduce that risk? Because now that's risk management. And if you did that, let's say 100 times this year on a demo account, 100 times you did 5 trades at once, that only counts as one, and then you manage them, and you're keeping track maybe with an Excel spreadsheet, and you're finding what you're doing is you're finding the quality of your entries, and you're learning how to keep in your trades, because as you become a better trader, your trades are good. When you pull the trigger, you expect to make money. There's no nervousness about, well, what if this collapses? What if this happens? What if that happens? No, 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 no. You make good trades. So what you're now doing is then you want to stay in the trades. Sometimes there's volatility for you. Sometimes there's volatility against you. Is your stop 33 pips or 55 pips or 99 pips? Are your trades generally 150 pip winners, right? So I typically do like 5150s, right? 33.99s. Sometimes I'll do 52.22s. Sometimes I do 333s. Okay, depending on time of year and where we are and what I expect and where the target is. But I think if you behave that way, ladies and germs, where you walk in and you are kind of like machine learning. You're not just sitting here throwing down trades hoping that over time you'll get better. You won't. You won't. It's incredibly mediocre as a strategy to learn. Again, instead of taking golf lessons and hiring a golf pro, you'd rather save money. You don't want to hire a golf pro. You don't want to take lessons. Instead, you're just going to watch golf on TV and then every Wednesday golf with your buddies. Dude, you're going to suck as a golfer 25 years from now. You're still going to be mediocre because you've practiced over and over and over mediocrity. So if you buy into this idea, because some of you might agree with this and some of you are like, nah, what's he talking about? Well, then for the ones that I'm reaching out to, change your behavior and start being much more like teaching yourself like you're teaching a machine. What is the ideal stop for you? What's the ideal target for you? Are you even trying to hit 300 pip targets? And if so, why are you not? Is it your stop is too close? Is it that you move your stop too quickly out of fear? Well, you need to remove the fear by building confidence, and you're going to get confidence through your consistency and control, which means you're practicing specific practices. So in my book, I actually say write out the 1 or 2 goals for the week. And your goal for the week might be, you're going to get into a trade and stay in it till the target. You understand? So many of you guys are so happy to get 100 pips. As soon as it hits triple digits, you're out. Okay. Well, that might be the perfect strategy. But if you had 2 or 3 other trades, you can say, well, I'm going to take on my real account, the 99 pips, because you love it. You just hit triple digits. You hit 100 pips. Oh, you're the greatest trader in the world. But what you don't, right? So now let's say you have 2 other trades on your demo account that are mimicking that first trade. You just took 100 pips out, put it in your pocket, everything's good. You'll leave it going and you'll find out, does it come all the way back down 100 pips and knock you out of break even? Well, then good to know. Your exit was great. But what if it goes up another 100 or 200 or 300 pips? Well, then you get to ask yourself, well, why did it continue going up? Is there information on your charts or in the fundamentals that would indicate that it was going to do that? And why did you somewhat mismanage it? What did you miss? Why didn't you know? Okay. And I'm telling you, if you put a year of intellectual thought into your trading, you're going to improve. Just like if you thought I hired a golf pro, by the way, I used to have a golf pro. He played again, he was paired with Tiger Woods, and he beat Tiger Woods that day. Also, Tiger Woods never shot a 59, and my golf pro on the PGA Tour shot a 59. So now he's teaching me, right? And again, imagine I had a golf pro and I studied the 5 iron every day. And I mastered everything from the grip, how I hold it, to my stance, to my weight, to my swing. I'm analyzing it with computers. I'm comparing it with other golf pros. I'm getting feedback from my coach. And I hit 1,000 balls a week. And let's say once a week or once a month, not just am I golfing, but I'll do a whole round only using that 5 iron. I do it over and over and over and over. I would imagine that I'd become epically good with that 5 iron, and I would be able to control the ball the way I want. High trajectory, low trajectory, hit it left, hit it right, put some backspin, put some topspin, right? I'd be able to master all of that control, and I'd have a very high level of confidence. So in a normal golf round, if uh, if I hit a good drive and I'm out in the middle of the fairway and I come out there and I look at the ball and look at the green, I'm like, that's a 5 iron. I got this. Okay. You see the analogy there? I want you to trade like that. So I'll leave you with that, and I will see you in the morning. If you're my live group, I'll see you this evening. Tomorrow's going to be challenging, though. I might end up missing the swing trading group. This is going to be a difficult one for me. So we'll have to come up with a plan if I can't do that meeting. Um, I'll have to make it up to you somehow. Okay. But I will. Okay. I will make it up to you. It just had to do with the consulate general's time, and I only got that time, and that kind of gets in the way. Is all I'm saying. To come back, like I can't be here at 4 and doing it, so I might have to miss it. Yeah. So we'll work. Well, I'll make it up to you. I think if I can't do it, I'll make it up to you. We'll do something cool next week, maybe. Wait, I got the Masters next week. That's complicated life. Yeah, I know. Sob story. Sob story. So, anyways, let me. What time is it? Yeah, I gotta go. Let me let you go. I want to thank you for all your positive energy that you put into and contribute towards this community. There's a lot of YouTubers that just bounce from guru to guru to guru to guru. Almost every single one of you are here every single day. I know you, and that's good. And I hope this is having a positive impact. Yes, maybe it's fun and exciting, but at the same time, I'm trying to make a difference. Okay, I'm not trying to impress you. I'm not trying, right? I'm trying to make an impression. And so at some atomic level, at my I care about you and I want you to succeed. But in our relationship, all I can do is share, and then you got to do all the work. Okay, you still got to do all the work, and I hope you do. And I hope, if anything, I help you find fun ways to do it. Because I can tell you, this is a tough gig. But if you get it right, it's worth the effort. Okay, so I'm holding up a peace sign. I know you can't see it. Maybe I'll throw it on a camera tomorrow. But peace signs up, everybody. Peace on earth. May the pips be with you. May your profits be above average. Thank you for being flexible and understanding and patient with me as I travel. But I sometimes it's very difficult to do these live streams. A lot of strings need to be pulled, rooms need to be sort of put together at the last second. In this case, the hotel room worked fine, but anyways, thank you for joining me on my journeys and trying to keep our eyes on the prize at the same time. So we'll see you in the morning. Thank you for being in my life. I will see you again soon. Don't forget to do the thumbs up and leave a comment. Okay.